I am Brett Turner. I'm not Nathan Wanamaker. Nathan normally in the past has always taught this class, and this year something came up and he couldn't teach it. So about a week ago, they asked me if I would be willing to teach it. And I said, yeah, I guess so. So here we go. All right, ethics and responsibilities of tax professionals. Now I'm hoping that most of us know what ethics are, okay? But you know, we still have to be reminded constantly, the IRS and everybody wants us to be sure that we're all trained in this. They define ethics as the rules or standards governing the conduct of members of a profession. Is it doing the right thing? Most would define ethics as doing the right thing. Again, we hope this is a matter of common sense and conscience. And the people will always react in an ethical manner in all situations. Professional organizations have become concerned about the public losing faith in ethical and moral standards, not in just the tax industry, in lots of industries, okay? Whether it be legal, tax, business, there's a lot of concern about that. So they've come up with codes of conduct and they're increasing the educational requirements. How many of you in this room today are an enrolled agent? Do we have any enrolled agents in here? A couple of you, okay. We have any people in here participating in the annual filing program that's voluntary? Okay. Well, if you're an enrolled agent, as you know, you have to have 72 hours of continuing ed every 3 years, a minimum of 16 hours a year. I highly recommend the enrolled agent designation to all of you because it puts you in a different position than anyone else. It allows you to represent people before the IRS if they get audited. You can do things that an unenrolled preparer cannot do. You can do things that someone in the annual filing program cannot do, okay? If someone comes to you and their return was prepared by someone somewhere else, you can represent them and help them. You can make some extra money, especially during after tax season, by helping people in audit situations if you're an enrolled agent. You can typically command a little bit more in your fees because of your status and your knowledge, okay? But you have a minimum of 16 hours a year if you're an enrolled agent. And I highly recommend if you are an enrolled agent, don't just take 16 hours a year for a year or two because I made that mistake once. And trying to do 35 hours in 1 year was no fun. Especially when you're trying to do it at the end of the year. Compliance with the laws, regulations, policies. You know, those are all training programs that are concentrated on. And just because it's legal, it doesn't always mean that it's right or it's ethical. There's a lot of things that are legal, but when you really think about them, they don't really seem ethical, okay? Let's face it, a lot of people are found innocent on technicalities a lot of times. You know, it's the way the law is written. Supreme Court Justice Potter Stewart defined ethics as knowing the difference between what you have a right to do and what the right thing to do is. And they are two different things. Develop an ethical environment. You know, to do that, communication is your first key. Communication with your clients, communication with your employees working for you. Employees, managers, and owners must realize that ethical behavior is expected, will be rewarded, and is responsibility of everyone in your organization. Expectations can be documented through formal documents, a code of ethics, standards of conduct, ethics training courses. But prescribed behaviors, if you don't do these things on a day-to-day basis, they don't become automatic. It's like anything else. You have to do it consistently for it to become automatic. It's just like preparing taxes. If you don't do it on a regular basis, certain things in preparing taxes aren't automatic. When you do it all the time, you know, some returns are just so easy because you just fly through them because it's just automatic to you. Trustworthiness, respect, responsibility, fairness, caring, and citizenship. These are the 6 pillars of character that guide our choices. The standards of conduct that arise out of these values make up the ground rules for ethics. The tax practice business can include preparation and electronic filing of returns, tax planning, representing a taxpayer before the IRS, tax education for clients and practitioners, tax court or other judicial representation. Conduct guidelines for professional tax services are published by the Internal Revenue Service, American Institute of Certified Public Accountants, state societies of CPAs, state boards of accountancy, and the state bars and American Bar Association. Responsibilities to your client. We all have responsibilities to our client. And what's the biggest responsibility that we have to our client? Anyone. What's the biggest responsibility when we're preparing their taxes? Come on, somebody's got to know. Yeah, best job to lower their tax liability as much as we can within the limits of the law. So in that case, you're either going to get them the biggest refund they can get, or they're going to owe the least amount of money they could owe when you do that tax return. So that's always your first priority, your first responsibility, is protect their interest and work within the framework of the tax laws and the rules. You know, they have a right to the lowest legitimate tax, to not pay more in taxes than they should. Now, you know, someone can invest their money in tax-free bonds. They can purchase bonds, and so they can, the interest is not taxable. There's nothing wrong with that. But, you know, reducing or avoiding taxes to an illegal means, such as trying to conceal income, that is tax evasion. That is illegal. And I'm going to tell you, from what I've been reading, the IRS has programmers working on algorithms so they can figure out about income that's not being recorded. And you say, well, how can they figure that out from algorithms? They have access to the credit card databases and the credit reporting bureau databases. And they can figure out your spending habits based on that. And if your spending habits are way out of whack with your income, they can figure out that there's income that's not being reported somewhere. And they've been tasked by Congress because they know there's millions of dollars not being reported. At least that's what they feel. And Congress has told them to figure out a way to find that money. Taxpayers do not have the right to use illegal means to reduce tax liability. Tax professionals have an ethical responsibility to inform taxpayers of the tax laws. So whether our clients like it or not, we have an ethical responsibility to explain to them what they can and can't do within the framework of the laws, okay? It's very important. Tax professional ethical responsibility to the tax system as well. You know, we have a responsibility to the codes to not try to violate any of the laws. Tax professionals must refuse to knowingly prepare an illegal return. You know, the public places trust when they come to you as a tax professional because they're looking for you to give them the proper advice and to find them deductions and credits that they couldn't otherwise do on their own. And some people are going to come to you even though they can prepare their taxes themselves because it makes them feel more comfortable and takes the fear of the IRS away from them. And also they know that they have you to fall back on as a professional, you know, if anything does happen. You know, our clients, they share the most intimate, they have to share the most intimate details about our financial situation with us, okay? So they're placing a lot of confidence in us. Now let me ask y'all something. Do any of you in your tax offices, do any of you have these imaginary licenses hanging on your wall saying that you're a marriage counselor or a child psychologist or a counselor? I have several licenses like that. I just can't see them. I don't know about the rest of you. It's amazing what people will tell you, though, isn't it? But you know, one thing about it, the reason they're telling you those things is they trust you and have confidence in you. You're building a relationship with them, you know, and they're trusting that you won't tell anybody else what they've said, but they will talk to you about things. And sometimes in those talking about those things, I find out things that I can help them with on their taxes by accident. You know, we have a responsibility to protect their privacy as well as prepare an accurate return. If you're at a party or an event somewhere and you're talking to somebody and they say, hey, do you know Sally Jones? Is it okay for you to say, yeah, I know Sally, I do her taxes? Have you violated her confidentiality and her privacy by saying that you do her taxes? Yeah, you have. So Sally probably doesn't want anybody. It's okay for her to tell them, but she doesn't want you telling them. So you have. Professional responsibility includes continuing education. Whether you're an enrolled agent or part of the annual filing program or not, you should be studying the tax law updates and taking continuing education classes so that you can do the very best job you can for your clients. Okay? Yeah, you have a question? Yes, sir.
Even though you tell them that's not ethically wrong, it's just confidential.
Well, you violated confidentiality, so you violated part of Circular 230 when you do that.
I was a lawyer about that just a moment ago when he was telling the difference between what you can say as an attorney versus tax. And he just said that you can let a person know that you did work for it. It doesn't violate the legal rights.
But it violates Circular 230, which is what the IRS guidelines are.
All right, we've got an attorney over here that's saying different, so we need to get him straight.
I mean, that's straight from the Circular 230 information.
I'm saying those attorneys don't know all the law.
No, they don't. I mean, and just because they're an attorney doesn't mean they understand tax law.
Yeah, I mean, he just gave us that speech at dinner, and I'm like, really?
Yeah, well,
I just didn't call that anything.
yeah, well, you know, then if you get in trouble, call him to defend you. Taxpayer education. You know, you need to educate your clients regarding allowable deductions, expenses, credits, and record maintenance. You know, the hardest thing that I have, and I'm sure all you have with your self-employed clients, is getting them to keep proper records. Okay? How many of you have them come in with a piece of paper in their hand and everything is written down on a piece of paper for you? Okay? And it's all even numbers. Which is a big no-no because that's like a major red flag at IRS if everything is even numbers. And you ask them about their mileage and they sit there and they go, that was about 12,000 miles this year.
What did I have last year?
Yeah, or what did I have last year? Yeah, I always like that one. I go to the same places. Oh, okay. But, you know, getting them, we need to tell them what kind of records they need to keep. You know, how they need to keep their mileage log. That they need to have pair receipts with odometer readings on it to back up their mileage log. You know, they need to keep receipts. You know, they don't necessarily have to have one for a receipt under $75, but they got to keep a log of what they bought, where they bought it, and how much it was. So, you know, if they don't want to stay out of trouble in an audit, they've got to have those records. Because I'm going to tell you, 2 years from now, if they get audited, it's a lot harder for them to go back and recreate stuff. Know your client. Conduct a thorough interview with your client. Ask the question to determine your tax liability. You've got to ask them a lot of questions. Make sure you're not missing anything. Okay? Make sure that they don't have child care credit. You know, maybe they have a parent that they're supporting. They're providing over 50% support to the parent. They don't realize that they can take that parent as a dependent even though they don't live with them because they are giving them that support. So, you know, you have to ask questions. Planning, help your clients minimize their tax liabilities. Well, that's what we're all here for, you know. And we got an example here, you know, encourage contributions to retirement plans. I always talk to people about their 401ks and how it can help them on their taxes, contributing to it. And also how by not contributing to it, they're leaving money laying on the table when they don't take advantage of the company match. You know, so you need to talk to them about that. You know, there's all this fear of losing their money. Well, if they're not putting it in there, they sure can't make money. So research your client's individual tax situation to the best of your ability. So, you know, you need to do research on their situation if it's unusual or different. I'm sure we're all familiar with Circular 230 in here, which is the basis of this class today. If you don't have a copy of it, you can download it off the IRS website, print it out, or save it into your hard drive or to a flash drive. I do recommend you do it. I don't recommend you try to read it at night because it will put you to sleep. I don't recommend you try to read it all at one time because it'll still put you to sleep. But read it in bits and pieces. But it's not bad to have a copy of it where you can access it if you need to make sure of something, to make sure you're not going on the wrong side of what you're doing. Because it's the regulations that govern practice for the IRS, and they've been amended. Final regulations have revised general standards of practice for the IRS and standards regarding tax returns and tax return preparers. Does anyone know when the Circular 230 was first put in place by Congress? And it wasn't called Circular 230 at the time. Anybody know how long ago that was? 1885. So it's been around for a long time. It became Circular 230 in 1921. So they've had this around. It isn't something that just came up a few years ago. As of today, preparing a tax return or claim for refund is considered practice for the IRS. The IRS also considers a person who files a return or claim for refund prepared by someone else as practicing before the IRS. Some tax professionals have wrongly suggested that they are not engaged in practice for the IRS unless they both prepare and file the tax return. Now, to me, that's kind of comical, but evidently they must have had a basis for it in some action, because the IRS said, okay, well, maybe we're not being clear enough on our definition, so let's redo it. So now it says either preparing or filing a document may constitute practice before the IRS. Who is considered a tax preparer? Any person who prepares for compensation, or if you employ persons who prepare taxes for compensation, makes you a tax preparer under Circular 230. Practitioners under Circular 230 are attorneys, CPAs, enrolled agents, enrolled actuaries, and enrolled retirement plan agents, and registered tax return preparers, which really that test has gone away, and they kind of replaced it with the voluntary annual filing program. We'll see what happens from there down the road. Who knows? That law's been hung up in Congress forever. And then you have your unenrolled preparers who have a very limited authority to represent clients. Don't go looking for Pub 470, because I promise you it doesn't exist any longer, because I went looking for it. They took all that information from there and they rolled it into another pub about practicing for the IRS and what you can and can't do. All right, your PTIN number. How many of you in here have a PTIN number? All of us, I would hope. You still waiting on your refund checks from when we were paying to renew our PTIN number, and they said we might get our money back? I'm hoping maybe I get it for Christmas money. But you know, you have to renew it every year. And you know, really, I don't want my Social Security number on somebody's tax return that I do. Not in today's world. So that PTIN number protects you. Plus, it now gives the IRS a way to track how many returns you're doing and you know what you're doing. The other thing is that when you renew that PTIN, you always want to check to see how many returns it shows that you prepared during the year, because there are preparers who have had their PTINs compromised, and people are preparing and filing tax returns using their PTIN. So if you see a big difference in what you did, you need to report it, because somebody's filing fraudulent returns over your PTIN. We all know it's issued by the IRS. We all know it has to go on the tax return. And you know that you're supposed to, you know, when you finish that return, that you're supposed to sign that return. Any statements or documents are required to be signed, such as the 8879 when you're electronically filing. If they come in and check you and you haven't been signing stuff, they can fine you $50 per return up to $25,000 a year. There's alternate methods for signing, such as rubber stamp, mechanical method, computer software signing. If you have a signature pad, you can sign your signature with TaxSlayer. You can sign your signature on there ahead of time, store it in the system, and it will automatically sign all your documents for you as a preparer. Required retention of records. The IRS requires that we keep copies of tax returns. They do not have to be paper copies. They can be the PDF that you save coming out of the tax return. And then you can scan in all your documents that the client gave you and save that in a PDF. And you also got to at least maintain a list that includes the name and taxpayer identification number of your clients that you prepare returns for. You must maintain those records for 3 years from the return date, due date, or the date the return was prepared. So if you have a taxpayer that files an extension, files after the normal April 15th due date, which I'm not sure if we'll ever see April 15th again, because I guess y'all know their deadline again this year is April the 17th, because Emancipation Day is hitting us again. But they have you got to keep it from 3 years from that date.
Is that just on the dates? I know I'm the user of 5 years.
What now?
I thought we were supposed to keep them for 5 years.
3 years.
Just the date.
Right.
3 years.
3 years from the date it was due or filed, whichever was later. You can keep them longer, but you got to keep them for at least 3 years. Mm-hmm.
I had a client that came back, we did 2010 through 16.
Mm-hmm.
So I mean, I keep 10, since we just did it.
For 3 years
3 years.
from the date it was filed, yes, sir.
Okay.
It's just like, it's the same instance as the IRS has 3 years to come back and audit that 2010 return based on the date it was filed.
Right.
So, and if they don't file a return, well, they can come back on them for a long time until they get it filed. Yeah, I do a lot of multiple years myself, and it's amazing how many people haven't filed in several years. If you fail to maintain those records, you can be fined $50 per return, again, up to $25,000 a year. You're required to make copies or client list available to inspection by the IRS. You know, you got the third-party designee that can go into tax returns. Again, if you set up your configuration correctly in the program, it'll auto-populate that for you. You know, they can say they want a family member, friend, or preparer. I'm not sure how many of us want a family member or friend talking to IRS about our tax return, but you know. If the taxpayer chooses to prepare as a third-party designee, print prepare in this section. The authorization applies to the designee and third party listed on the return, and then their phone number and 5-digit PIN. Again, it auto-populates once you set your configuration up. Confidentiality. Tax professionals are required to maintain confidentiality of information obtained from clients. Preparers can be subject to penalties of $250 per instance, up to $10,000 per year for knowingly or recklessly disclosing or using tax return information for any reason other than to prepare a system for preparing the return. Policies and procedures should be in place to ensure compliance. If you have seasonal preparers or full-time preparers working for you in your practice, and you don't have a policy and procedures manual in place, you need to get one in place. And you need to have them sign a statement stating that they have read those policies and procedures, understand them, and will abide by them, which would include, you know, being familiar with Circular 230. That protects you because as that manager or owner of that practice, you can be held responsible for what they do if they do something unethical or illegal. By putting those practices, putting those in place, you're showing you're doing everything you can to keep that from happening and train your employees. How many of y'all know about EITC Central? Where you can, it's a part of the IRS website where you can go to have scenarios that help you with figuring out somebody qualifies for EITC or not. There's also a test on there that we have our people take every year and print out the certificate, and it goes in their file. You also get continuing education credits for it. But that's just another way to ensure that you're doing what you're doing to train your people.
What was it again?
EITC Central. I think that's still the name of it. It's in the IRS, it's on irs.gov. You can link. If you do a search inside irs.gov, you can get to it. I mean, we have preparers who have been with us for years, but every year we do it again. Confidentiality training. Don't use the client info for any purpose other than the tax return. Share client info with associates on a need-to-know basis only. Control access to client files. Don't leave client files in view of other clients. So if you got stuff on your desk and somebody comes walking back to your desk, you need to stop them and back them up. I have to do that sometimes, especially after tax season. They'll come around my counter and start heading toward me. And I'm like, whoa, stop, I got stuff all over my desk. Hold on a minute. Limit access to and lock your computers. If anyone in your office is working on a return or have their computer up and they get up and leave their desk to go get a drink of water, go to the restroom, smoke break, get a snack, whatever, they need to lock their computer when they leave their desk. The IRS does not want people coming in to be able to see what's on that computer. Just like Glenn said yesterday, and Jackie will verify, if that happens in the tax slayer building, there's no questions asked, there's no second chances, you get to go home. You're fired, you've lost your job. You have to be careful because of identity theft and fraud. That's a big push right now because there's so much of that's going on. I'm sure y'all all had some rejects over the last couple of years. where you filed a return and it comes back, there's already been a return filed for that person. And then you got to do that lovely form to attach to the top of it to mail in with return about the theft. That it's an identity fraud case. And then it takes that client forever to get their tax refund while they're waiting on that to be worked out. Confirm a client's identity before answering telephone questions. How many of you have ever made phone calls to IRS to help a client or find information for a client? Even with a 2848, before they will give you information, they're going to verify certain information about that client, their name, their date of birth, sometimes, their address. I mean, it just depends on who you get on that phone and how much they do. I use that as a guideline myself for doing that when somebody calls in. Now, a lot of my clients, I've had them for years, I recognize their voice, which is kind of scary, but I do. And I probably should do it with them. I don't, because they'd probably ask me, think I'd gone crazy if I did. But you know, you have to be careful, especially when someone calls in that one of your other preparers does and you don't know that person. You got to verify you're giving information to the right person. Don't accidentally divulge private info by cash remarks. Again, here's what I was talking about earlier. Oh, I know Nathan Wanamaker. He has his taxes prepared in my office. You're violating their confidentiality. Additional standards by professional associations. The National Association of Enrolled Agents says members and associates should maintain a confidential relationship between themselves and their clients or former clients, disclosing confidential information only when authorized or legally obligated to do so. The Accreditation Council for Accountancy and Taxation says individuals accredited by this council should not violate the confidential relationship between themselves and their clients or former clients. And the National Association of Tax Professionals says, I will observe the client's right to privacy and confidentiality. They basically say what everybody else says, they just cut it down a lot. But you can see the recurring theme in all of these. Privacy. Preparers are required to conform to privacy provisions of the Graham-Leach-Billy Act, which help give us all the good stuff in the 7216 that we have to get signed by the client, or we're supposed to present to the client to sign. Now, we have to give them the right to opt out of it, which is fine. One thing I do to protect myself, and there's no one that says you have to do this, and I only have a couple of clients that refuse to sign it, but I'll write on there, on that line, signature, I'll put refuse to sign and have them initial by it. I'll only do that because I don't trust IRS examiners if they come into my office looking at things. Because they could easily say, well, where's your 7216s? And all I happen to need to do is have them pull those two files, which would be, you know, unlucky. Clients will receive an annual notification regarding the info sharing policies of a financial organization. Must disclose to clients non-affiliated third parties, insurance, mortgage, financial service companies with whom non-public private info is shared. So if you have companies that you work with, or if you have more than one business, you have your tax preparation business, you have an insurance business and or a mortgage business or a financial services business like investments, that's got to be incorporated into that 7216. So they know that that information can be potentially disclosed. We have that. Now, we don't disclose it until they tell us they want to talk to someone in that division, but you can't legally disclose it without that thing signed. And like if you have an investment arm, a lot of times they need a tax return to look to see what they need to do to help the person, whether it's retirement or whatever. Well, you can't do that without that being signed. Even though that person tells you they want to talk to them, they have to take the tax return to them then. Client must be given a chance to opt out, like I said. Outsourcing. Anybody in here outsource their tax returns to be prepared by some company overseas? Sounds crazy, doesn't it? But you know there's some very large CPA firms in this country that do that. They outsource overseas to the Middle Eastern places to get returns prepared, and they come back to the Philippines and different places. Some people who do payroll and bookkeeping work and HR work as part of their practice, they'll outsource that to a third party to do. If you do anything like that, whether it be inside this country, outside this country, you have to disclose to your clients what you're doing. The AICPA, Professional Ethics Committee, issued a ruling saying that you must notify the client that your firm is using a third-party service provider Contractual agreement must be in place with third-party provider that guarantees confidentiality of client info. Practice includes, but is not limited to preparing and filing documents, corresponding and communicating with IRS, representing a client at conferences, hearings, and meetings. Attorneys, CPAs, EAs, and enrolled actuaries may represent taxpayers for officers, IRS counsel, or similar IRS employees. Client representation firms can become a source of revenue for a tax firm. Offering these services also add additional responsibilities. Practice with IRS requires commitment to continuing education requirements. So if you're going to do that, you've got to be doing continuing ed. You need to be. It may be necessary to refer a client to an attorney or more qualified representative. If you get into something that's above your knowledge, no matter what, you need to refer them to someone that has that. And especially if there's a chance that that client could be subject to criminal liabilities, you need to get them to a tax attorney so that they can help them. Avoid conflicts of interest. For example, representing a couple in the middle of a divorce. I'm sure no one in here has ever had couples come in the middle of a divorce and they want you to do, they each want you to do their taxes. And there's a fight over the kids. Who's going to claim the kids? You could have a problem there. I mean, because it could be a conflict of interest. So, luckily the ones I've had, usually they're in agreement on who's going to do that. But you got to be real careful to make sure they're in agreement, and they need to know that you're representing both of them. Representatives must maintain professional conduct at all times and deal with IRS at the highest professional level. Basically, they don't want you, when that IRS agent's giving you a hard time, they don't want you cussing them out in the conversation. And it's a hard thing not to do some days. IRS publications and Treasury Department Circular 230. 230 provides guidelines, laws, and standards for preparer ethics. Again, Pub 470 ignore. Tax prep is not always black and white. And that's true. There are some gray areas in there. I mean, you read one thing here, and then you reference over here and read that, and things start contradicting each other. It's just like if you called IRS and if you called IRS 5 different times and talked to 5 different people, you're probably going to get 5 different answers, or at least 3 or 4 different answers as to what to do. So, because of those gray areas, it depends on what you're reading, and you really have to look at that and look at the situation to figure out what is you can or can't do. You got to determine the nature of the issue, obtain as much info and documentation for a client as possible, research thoroughly, document findings, inform client of your findings and explain consequences of each solution. Choose a legal and ethically correct solution for all parties involved. All right, let's see how smart we all are real quick. So everybody's got to wake up now. Question, there are many responsibilities both professionally and morally to being a tax preparer. Which of the following would not be considered a good practice? A, staying informed of all tax law updates and changes throughout the year. B, teaching the client about allowable deductions and expenses. C, asking detailed questions and learn as much as possible about the client's tax situation. Or D, informing the client of ways to dupe the IRS so that the client pays the least amount of tax. D, very good. Never give illegal advice. And I really don't think anyone in this room would do that, or else you wouldn't be here today in these classes, okay? I really and truly believe that. I really and truly believe the only people that do that are people that don't care about continuing ed and things like that. They're just trying to make a buck, and they're going to do anything they can to help people do things on people's taxes. A tax firm must maintain the confidentiality of each client's tax information. Which of the following practices is not a recommended practice? A, shred all the client's tax information once their tax return has been accepted by the IRS. B, password protect every computer in office and give each preparer a different username and password. C, refrain from discussing the client's tax situation with other associates. Or D, verify a client's identity thoroughly before discussing a tax situation on the phone. Hey, yeah. It doesn't mean you can't shred them necessarily, but you've got to have them scanned in a PDF before you do that. Because you've got to be able to provide those copies back. And you have to keep that information for 3 years. I mean, let's face it, if we kept all the documents every client gave us for 3 years, you need a lot of filing cabinets, because we used to have to do that before we could scan stuff in. And that becomes a fiasco. That's a nightmare. Yeah.
What do you do with that? I mean, usually I got a summary sheet.
Right.
I summarize the number of trips,
Mm-hmm.
dollar amount, but those receipts, I don't scan in.
No, I mean, that's a personal preference. You can or you don't have to. You know, just be sure you keep your summary because that shows the IRS, you know, where you get. But then you need to tell that client, don't throw these receipts away.
Yeah, and then eventually get audited.
Yeah, because on medical, you got to hire. Medical and unreimbursed employee expenses right now are two of the biggest places to get audited on a Schedule A
So
right now.
basically, my summary worksheet will work for that.
It'll work for that, but you're going to have those receipts to back it up. So that client needs to hold on to those receipts, okay? And you're sitting there organizing all, you know, if I'm organizing receipts for people and adding all that up, I charge extra. They got two choices. They can pay me extra to do that, even if I have one of my seasonal people doing it for me, or they can go home and organize them themselves, because that's a lot of work. And especially on prescriptions, they can go to the pharmacy and get a printout, which is a lot better than the receipts anyway. And so
What's the two things you say they're auditing for, medical and what?
two of the biggest hot buttons right now on Schedule A is medical expenses and unreimbursed business expenses, you know, things subject to the 2%, especially the business expense side, because people are taking a lot of mileage they shouldn't take. They're taking other expenses, you know, they're taking meals they shouldn't take because they go out to lunch with their coworkers, and so they decide that's a deductible business expense because they talked about that day at work. Well, that doesn't fly. You know, and I've had people come to me who are getting audited, and they've got 25, 30,000 miles on their Schedule A, and they're a school teacher. How many school teachers you know with that kind of mileage? They don't run up between schools that much. You know, we're also, along with being a tax preparation income, we're also audit maintenance pro. So I have to help people all over the country that are users of tax layer, you know, clients, if they get audited. And I've seen a lot of that. And unfortunately, in that situation, I've had that. Just not much I can do. I look for other ways to help them to minimize the impact. There's nothing I can do about that if mileage is put on there that shouldn't have been put on there. You know, some people think that they can take their commuting miles. You probably heard it too. I hear all kinds. Well, it was over 50 miles to my place of work. I'm like, yeah. They don't care if it's 200 miles. Here in the area, we have a nuclear site, Savannah River site, if you're not from this area. And at their heyday during the Cold War and all, they produced tritium, what made the bomb go boom. Okay, so it's under DOD, it's, you know, high security. I've actually heard people say, well, once you get to the gate, you can deduct your miles from the gate to your office. I'm like, huh? So, you know, if you leave your office and you go somewhere else for business purposes, you can deduct that mileage if you have enough. But we all know it's not easy, one, to take the medical deduction, okay? And it's not easy sometimes to get those miscellaneous deductions. You gotta have a lot of it, especially if you have, you know, serious income. And the other problem is, let's say you've got somebody that's got $40,000 worth of income, and they got $30,000 of medical expenses they paid. You talk about asking for an audit. The IRS has a system called the PLE, personal living expenses, that runs against tax returns. And it unfortunately uses averages all over the country, which may not be the same for your area. But that's how they'll look at, that thing will look at the amount of income to return, and it'll kick a return for an audit based on that. I mean, I've had it happen where I was trying to help a guy out of an audit. He and his wife had been in there, they were 29 years old. He was a truck driver. And they'd been in trouble with the IRS getting refunds taken since they were 22. I actually went back, amended 2 years return, did the current year return, went to the IRS office in Columbia and got them, they now get refunds. But they had gotten in trouble years ago on EITC, and he was an owner-operator truck driver, and he had somebody doing the taxes. They weren't even depreciating his tractor that he owned. I mean, here's, you know, they're showing him with $2,000 of income. Well, you can't live on $2,000 of income. But even when I was showing him with about $27,000, $28,000 of income, the PLE, the base the way the IRS has it set up, wouldn't work. But what I had to do was get a spreadsheet, made a spreadsheet of all their expenses and what they pay. Like, they didn't have a house expense because they're living in a family home. The examiner took all that, plugged it in, and once he plugged it in, the living expenses fell in line. So there's all kind of things that can come up there. Circular 230 contains the guidelines and regs issued by the Treasury and IRS that governs who represents taxpayers before the IRS. These include preparing returns, communicating with the IRS, representing a client at an audit, hearing, or court appearance. EAs, CPAs, and attorneys can represent clients in administrative procedures. Violation of any Circular 230 regs can result in fines, penalties, and/or suspension. Information to be furnished. If the IRS requests records of info concerning the taxpayer, the preparer is required by law to fulfill the request, unless the taxpayer fully considers the info as private and confidential. Privilege does not apply in a criminal tax matter unless the preparer is an attorney, because that's client-attorney privilege. Preparer must immediately notify the IRS if the requested records and information are not in his or her possession. Example, you prepared Tom Brady's tax return for the past 2 years. We got any New England Patriot fans in here? Uh-oh. The IRS is requesting information for the year before Mr. Brady became your client, but you have copies of Mr. Brady's return for the year in question. These copies contain information for a previous tax preparer. You are required to provide the IRS with info about the preparer listed on the earlier return. But when you do that, you also have to inform the client of the IRS's request. Knowledge of client's omission. If you find out or know that the client has omitted something on their tax return, you've got to notify them about that. You've got to tell them what they need to do to correct it, which we all know in most cases is an amended return. You've got to tell them the consequences of not correcting that issue. You've got to, the client can choose not to correct it. We can't force them to do amended return. But you need to let them know what the consequences of not correcting it is. And if they don't correct it, then you need to make notes that you've talked with the client about it and that they chose not to correct it, and you tell them what the consequences were. In the software, you can do that in the notes section. I always put the date in and write all that out. And then, save it. And I even mark it to pull forward to the next year so I can remember things that went on, especially if they ever come back, if they come in the next year and say, I got this letter from the IRS. They said I didn't report something. I gave you everything. And I pull it out, you remember this? Oh, that's what that's about? I'm sure. Just bring me a copy of the letter and we'll see. They know. That's why they didn't ever show up with the letter when they got it. And then I'll ask them, did you pay it? No. I said, well, hope you get a refund this year because they're going to take it out of it. Example. A client has employee business expenses. After reviewing last year's return, you find that she has taken a deduction from mileage and actual expenses for the same vehicle. You must inform the client that she is not entitled to both mileage and actual expenses. I know that sounds crazy, but I have actually come across returns doing that same very thing. You should offer to prepare an amended return. It is the client's choice to allow correction or not. Due diligence must be exercised by a preparer. In preparing and filing returns, other papers relating to IRS matters, in determining the correctness of oral or written representations made to the Department of the Treasury, in determining the correctness of oral or written representations made to clients with reference to matters of the IRS. Example, and they're talking about here earned income credit, child tax credit, additional child tax credit, and American Opportunity Tax Credit. The problem with the 1098-Ts is simply about 5% of the colleges that I see put the payments received in box 1. They all put it in box 2, amounts billed, and then they show scholarships. Well, you can't just assume that's what was paid and subtract scholarships from that and get the answer. If it's in box 1, you can do that. So I've gotten to the point now, especially with American Opportunity, and I've got clients give me a printout of what was paid from their child's student record. Because I'm seeing more and more audits on this American Opportunity Credit because of the refundable portion of it for the $1,000. Okay? Because in that amounts billed, they can actually have in there the amounts billed for the next year for the spring semester that didn't actually get paid until January. So you gotta be careful there. They're getting tougher and tougher on that. Also be sure that you count, that you look back and see how many times they've claimed American Opportunity Credit if you've been doing their return for years and you don't do it more than 4 times. I screwed up a couple of years, well, they got the letter this year, I screwed up in 15 and miscounted. So now I'm trying to change things to tuition fees deduction to at least minimize what happened. You know, earned income credit, child tax credit, additional child tax credit. If you got any questions about what they're telling you, you need to get additional documentation. That documentation can be something on school letterhead stating that those children live at that address and that that taxpayer is showing us a custodial parent. Because they have that on record, or records from their doctor, or something else that will work. On letterhead is a statement from their church pastor on church letterhead signed stating that they live there and live there, that pastor has knowledge of that. Okay? If you ever get audited, you're going to need more information than that, but at least shows the IRS, if they look at your files, that you were doing all you could to make sure that they could claim those credits. And that's becoming a big one when they go in and look at files. And it's a $550 fine per return, up to 50 grand. A preparer will have exercised due diligence if he or she relies on the work of another, and the preparer uses reasonable care in engaging and evaluating the other person. The preparer must complete 8867. I think we all know what 8867 is. And when you're doing an earned income tax credit return, you can't get out of the software and finish the return without answering those questions anyway, which is a good thing. Preparer must have been given information by the taxpayer or attained it in some reasonable way. Preparer must not know or have reason to know that any info used is incorrect in determining the taxpayer's eligibility for, again, the earned income credit, child tax credit, or American Opportunity Tax Credit. You know, how does that happen? Well, easy. You look down and they got a wedding ring on and they're telling you they're single. Now you have possible knowledge that they're married. Or they say something about their husband and wife and they're claiming they're filing head of household. You know, you have to question them on that. A lot of people do live together for years and they just loosely call each other husband and wife. But I will tell you, some situations I've come across, I've questioned them, well, she doesn't work. I'm like, okay, so she can't. I'm like, do you realize by putting her on the return with you that you're actually going to get more money back that way? Huh? They've been told, oh, no, you need to file head of household, you get the most back that way. And because that wife's not working, that's what they think. That's part of us questioning and educating our clients. It's amazing. I'll be right back with her. Because I'll show them, I'll give them a dummy, I'll plug in the information to the wife and show them what the difference is, and I'll be right back. So if any information seems incorrect or inconsistent, the preparer must ask reasonable questions concerning that information, just what was just talking about. Yes, you have to be careful you don't chase a client off asking the questions, but you got to ask the questions. No attorney, CPA, EA, or enrolled actuary shall arbitrarily delay the prompt settlement of a matter before the IRS. You have a professional responsibility to protect your client's rights. You should take the time necessary to carefully investigate any issues at hand before responding to the IRS. So you need to take that letter, look at it, and make sure that you've covered everything that you can cover to help that client. What do y'all think it means by arbitrary delay a prompt settlement of a matter with IRS? Any idea? Some people will send just part of the information in to slow things down. You know, when they know they can't win the case. You can't be doing that. You know, if you're running out of time, if you come up on the deadline to send information, you can request a 30-day extension, and normally you're going to get it, as long as you give them a legitimate reason. And sometimes it's because you're having trouble getting information because of wherever you need information from, they're giving you a hard time. Sometimes these schools, if kids have been in more than one college, it's hard to get transcripts from the prior college sometimes. Assistance from disbarred or suspended persons and former IRS employees. You cannot hire, you cannot go in business with, you cannot pay fees to anyone who's been disbarred or suspended. You're not supposed to be working with our former IRS employees and doing things like that. You know, people who work for the IRS who get into preparing taxes, they're not supposed to hold themselves out as having worked for the IRS. Now, we all know that they do it, but they're not supposed to. And this is just backing up what I just said. That's all part of Circular 230. An example here, one suggestion is on your employment applications when you're hiring people that you should have a statement on there. Have you ever lost your license to practice or been disbarred or suspended from practice before the Internal Revenue Service? They can lie on that question, but at least you show that you tried to find out. Fees. We cannot charge excessive fees. Have you ever seen another company that charged ridiculous fees to taxpayers? I sure have. I've seen it as. How much? Yeah. Yes, ma'am. And I've seen up to 1,000 for a return that should have been a couple $100. I'm like, this is, you know. And then I'm trying to figure out why do people pay it to begin with. Yes, sir.
What about clients you're trying to get rid of?
Well, see. Well, if you're trying to get rid of them, usually they won't pay it, they're going to go on down the road. Yeah, I call it firing my client. Yeah. Yeah, you jack the fee up trying to get rid of them. Yeah, you just got to be sure you don't get too outrageous.
Yeah, I just charge an extra $200.
Right, yeah. I mean, you know, yeah, we all have, unfortunately, we all have clients that we want to fire, don't we?
Yes.
Because you know that client's going to eventually get you in trouble if you don't fire them, or they drive you crazy when you're trying to do their taxes. So yeah, I do understand where you're coming from.
How do you get rid of them? But they still come back.
Yeah, I know, and that's what's so bad. Some of them keep coming back. So finally, sometimes you have to say, you know, you just have to finally look at them and say, you know what, we can't agree on how this needs to be done. So I really think that you need to consult with someone else in here and give them their stuff back and let them go down the road. A continued fee may be charged for preparation or advice connected to an IRS challenge or audit of a tax return as long as a practitioner believes that the IRS intent is to perform a substantial review. Attorneys, CPAs, and EAs generally charge more for their services due to their level of expertise and ability to practice with IRS, and then unenrolled folks typically are going to charge a little less because they don't have that same level of expertise. It doesn't necessarily mean that they know any less than an enrolled agent. It's just they haven't done what they needed to do to get that classification. Each preparer has an ethical responsibility to be fair to their clients when pricing returns. It is not an acceptable practice to increase fees based on the client's ability to pay more. Be nice if we could, but we can't. Now you can if there's more work involved. If you charge by the form, there's more work involved, you can do that. And I'm sure we've all had clients that, you know, regular clients, they lost their job, whatever, they've been down on their luck this year for whatever reason, and you've helped them out on the fee by reducing it some because they are a regular client and they will appreciate that. You know, it does happen. Return of client's records. If a client comes in, you do their taxes. A couple of days go by, they haven't paid you yet. They're supposed to come back and pay you. They come in to pay you, you think, but they want their records back because they've been told that the guy down the street can get them more money back or that they shouldn't owe any money. Do you have to return those records?
Yes.
Yes, you do. In the same shape they brought them, but you can make copies of those records, and you should for your files. Nor can you charge them. So, no, you don't give them a copy of work. Just their records is all you got to give them. You got to give them their records back.
I brought you a box full of loose receipts and you went through all the work of sorting them out, getting them all even. You can crumple them all back up and
Throw them back in the box, right? But you got to give them back to them.
Even if you executed an engagement letter,
Yep.
you couldn't charge them for it?
Nope.
Okay, I got a question on that.
Right there, the practitioner may not refuse due to disagreement over fees.
Okay. If you prepare a tax return and everything ready, they're trying to file everything, they decide they don't want you to do it.
Mhm.
Okay, so they come to get all their paperwork, and you know, they had to charge them something to do. So now they go off and lose them again, or the other person don't give it to them. Now they pick you already got copies of it. Now they want to come back. You know, stuff you already put in your computer.
You don't have to, at that point, you don't have to give it to them. You already given them back to them once.
So can you charge me and give it back to them the second time?
I wouldn't give it back to them the second time.
I wouldn't get it back.
I had done some work for a self-employed person He dropped me this big old box of all his receipts, so I just went through the receipts, did everything. So this attorney decides that he could do better than I can.
Sure.
So they sent me this little letter saying that they were gonna do whatever. I say, tell your attorney, let's go to court, because ain't no way you get these papers, and I've done all of this work. So I called him up, I say, file your paperwork, let's go to court.
Right.
He came over and did the stuff with me.
Yeah, well, court and IRS are two different things.
I know, but then
You know.
he's gonna take himself to court.
Well, right, but the thing is, if that client had gone to the IRS office, the IRS would have placed a phone call to you and said, this is agent so-and-so, please return the documents.
I really didn't care that.
I know, believe me,
And anybody else.
I've been there, but it comes at a point where it's not, it's not worth getting fined over. And also, it's not worth an argument in your office with other clients around, because it's going to hurt you more arguing about that in your office with other clients around than that. So you got lucky on that one. In such an instance, the practitioner may keep copies of the records, like we said. I mean, you don't have to keep the copies because, you haven't, finalized return, but I do it just as a matter of principle in case anything ever comes back, and I make notes that, well, one, it'll show it was never completed
I got a question.
or filed.
Suppose that they leave the documents, you do the return,
Mm-hmm.
they don't wanna pay you, they do go somewhere else and they conjugate up whatever, wherever they go, but then 2 or 3 years later, they come back to you, you still, I'm not a storage.
No, you don't.
So, in that situation, I can get rid of their documents.
Sure, yeah, after a reasonable amount of time.
After 3 years.
What I recommend to you, though, is you make attempts to contact them about coming to get their documents back. You document your phone calls. You send them a certified notice that if they don't come pick up their documents by a certain date,
will be shredded.
that they're going to be destroyed.
Okay.
And then, because with a certified letter, you're going to get that signed card back.
Gotcha.
And if they've moved, you're going to get something back saying they're not at that address. Well, you've done you've done your due diligence. You tried to get in touch with them about coming and get their documents.
Gotcha.
Yeah, you're right, we're not storage facilities. And the thing is, the more stuff we store, the more liability we're taking on by storing them.
Question. So if you have a client that did the same thing, they did the work, they asked for their records back, he's going down here to this other tax practitioner that wasn't, don't take the classes, nothing, and he did the taxes and had them getting less. So when he came back, is it authorized for me to charge him more, even though I haven't did no more work, I just packed up the bill, separate mine, they went down here.
I wouldn't charge them more. No, I wouldn't.
You wouldn't?
No, because you're right, Donald. You've done the work. You're not doing any more work. I wouldn't charge them more, because that could be construed as excessive fees because you added something because you were upset because they went down the street and they came back. What we need to be glad is that they came back, and
Because you didn't know what he was doing.
right, they're going to come back, and you know what they're going to do? They're going to tell other people, don't go to that guy, go to him.
You got me one minute.
A conflict of interest exists if a representation of one client will be directly adverse to another client. There's a significant risk that representing one client will be limited by the practitioner's responsibilities to another client. Solicitation. In relation to any IRS matter, the practitioner cannot use any form of public communication which contains a false or misleading statement. Practitioners cannot infer an employer or employee relationship with IRS. Enrolled agents shall not use the term certified when describing their professional designation. What they should say is enrolled to represent taxpayers before the Internal Revenue Service. Negotiation of taxpayer refund checks. We cannot sign or negotiate their checks. I had a guy in the first class this morning who asked me about having their refunds deposited in his account and taking the fees out. I only do it a couple of times. I said, you can't do it one time. That's why there's third-party banks. Best practices for tax advisors. Clients should be provided the highest level of representation regarding federal tax issues. There must be clear communication between the client and the tax advisor. Advisor must assimilate facts, check the facts, decide what is reasonable, and come to a conclusion that is supported by law. Best practice also includes advising clients regarding the effect of the conclusions. Use integrity in practicing for the IRS. Example, can a tax preparer avoid accuracy-related penalties if he relies on the advice of a given tax advisor? He can't avoid them, But it is possible to get them removed. It's just not easy. I've done it where someone was given incorrect information by another tax preparer, but it's not easy. Standards with respect to tax returns and documents. A practitioner cannot sign a tax return if the practitioner knows the return contains information that does not have a reasonable basis, is considered unreasonable according to published Internal Revenue Code, is a willful attempt by the practitioner to understate the tax liability, is a reckless disregard for the rules and regulations of the IRS, indicates to the client that his or her position on the return does not have a reasonable basis. The IRS can look for a pattern to determine if you've been acting intentionally, irresponsibly, or through gross incompetence. Realistic possibility standard, return may not be signed by the preparer if he sees that the return has no realistic possibility of being upheld on its merits. A position on a tax return has a realistic possibility of being sustained if an analysis by a person knowledgeable in the law can lead that person to conclude that the position has a 1 in 3 likelihood of sustaining on its merits. Advising clients on potential penalties, relying on information furnished by a client. A preparer may generally rely on good faith upon information furnished by the client. How preparers must have reasonable effort to determine if the information is correct and complete. I'm kind of moving fast because we're running out of time. Preparation of return. Some attorneys, CPAs, and EAs have another preparer complete the data entry on their tax return. The person signing the return must complete the thorough review of the return. Any question or unusual tax situation must be researched. Competence. The preparer must be sufficiently competent to engage in practice with the IRS. You must have appropriate skill level and knowledge to be competent in practice. You can become competent to provide the method of studying and return to the law, consulting with experts. Practitioners, overseer, or administrator of a firm's tax preparation are required to put in effect a set of logical steps, again, policies and procedures. Your responsible practitioners could be subject to disciplinary action for failing to comply with this regulation. You can give written advice concerning federal law. It must be based on factual and legal assumptions. You must consider all relevant facts that the practitioner knows or reasonably should know. Must rely on statements or findings of the tax preparer in reliance on them would be unreasonable. Must relate applicable law to facts. Must not take into account the possibility that a tax return will be audited or that a matter will not be raised in an audit, because you don't know. Any return can be audited at any time. You know, the IRS forms advisory committees that consist of attorneys, CPAs, EAs, et cetera, you know, to help get information to decide how they should be putting things in the code, in the Circular 230, and they give advice to the Office of Professional Responsibility, which regulates Circular 230. You know, there are things that can get you suspended from practicing. You know, obviously, you know, if you've been convicted of a criminal offense, you know, if you show a pattern of rendering incompetent opinions, failing to submit funds, don't ever take checks from clients to mail into the IRS. It can just get you in trouble down the road. Sometimes a client will want you to mail their check where they owe money to the IRS in for them. You know, unless you really know that client well, I wouldn't do it, because if you forget to mail it, you can be held responsible for that.
What about the question, where had a client didn't have a checking account, they gave me the cash, I wrote this, on my business account, okay?
I wouldn't do that. I'd tell them to go down to the bank and get a certified check. Not a money order, but a certified check, because if the IRS misapplies that payment, you can get a copy of the certified check to get the code off the bat to be traced. You can't do that with a money order. Don't write it out of your business account. Other bad behaviors: using false or deceiving statements to mislead clients, suggesting to a client a plan for evading federal taxes, attempting to bribe an officer or report the IRS, intentional failure to sign a tax return, disclosing tax information in a manner not authorized by the IRC. You know, you can be sanctioned, you can be suspended, you can be for intentionally violating Circular 230, being a gross negligence. You know, an officer at the IRS is required to report anything that they see that you're doing wrong. Anybody can report a director of practice, and you know, you have to follow provisions. You cannot be violating any provisions of the IRS, or so it can be reported director of practice. If found that a practitioner has violated any provisions of Circular 230 laws governing practice, the practitioner may be penalized based on the procedures. All right, we're at the end here. We got some questions. Let's do these real quick. Question: Ann, a tax preparer, feels that her client isn't truthfully providing information relevant to properly prepare the tax return. If Ann continues preparing the return, she'd be violating a rule in Circular 230. Which rule best fits this situation? 1020, when the IRS requests information from the tax preparer, the preparer is required to supply it. 1022, the tax preparer must exercise due diligence. 1021, if the preparer has knowledge that the client is omitting information, there's an error, or the client is not complying with the law, the preparer must inform the client on the correct way to comply with the law. Should the client choose not to correct the issue, the preparer should document the issue in writing. Or D, the preparer must promptly settle any pending matters. What's the answer? C? Yep. Question, Don has a new client. Joe, he says he's a single parent with children. Based on his earned income, he will receive a sizable EIC on his return. He has his Social Security number for his children, but no Social Security cards in his possession. When Don asks for the names and birthdays of the children, he stumbles over this. Don isn't certain Joe is being honest. What should she do? A, she shouldn't file the return until she feels certain that the children's information has been confirmed through documentation provided by Joe. She should make copies of all documentation for the client file, and copies of Social Security cards should be part of the documentation. She shouldn't file the return until she has Social Security cards in hand. She should prepare the return with information provided. There's no need to request additional information. She should refuse to prepare the return and report the taxpayer to the Taxpayer Fraud Division IRS. What's our answer? A. Yep, A. As an EA, Jack knows the conditions under which he may advise a client on a return. Which of the following incorrectly listed as a condition under which a practitioner may advise a client to take a position on a tax return? A, the position has a 1 in 3 or greater likelihood of being sustained on its merits. B, the position is not frivolous. C, the position is adequately disclosed. D, the practitioner has informed the client of penalties likely to apply with respect to the position. This only requires the practitioner is not subject to a penalty. D. All right, in summary, some of the best guidelines for tax preparation come from professional organizations such as an NATP. I'll keep myself informed of state and federal laws that apply to my field of practice. I will, to the best of my ability, apply these laws for protection of my clients. I will recognize the individual needs of each and every client. I will observe the client's right to privacy and confidentiality. I will adhere to the standards of professional conduct. And that is it. Thank you.